Hi guys, and welcome to another YouTube video here on my channel. Today we will talk about a trade that I took on Monday on the 20th of July. And I will give you a little bit of a trade recap, tell you what I saw in the market and what is important for you to also catch the top and the bottom in the financial markets. So for you guys that are new on my channel here, I trade NQ, the Nasdaq only. I only focus on this market and on the New York AM session, and all the trades that I take are on NQ. And most of the time in the New York AM session, sometimes I also trade the New York PM session, but this is the trade that I took on Monday. I entered right here at the top, and then my exit was right here and my partial was right here. So we are on the 15-minute chart, and as you can see, this is the whole price action of Monday. So we opened up the new day at 6 p.m. and then the New York AM session is right here at 9:30. And the most important thing to catch the top or the bottom of the market is to look at the previous price action that we already had in the day. So for example, right here, we can see that at 9:30 we opened up right here and then we traded to the upside, and from there we dropped heavily to the downside. And one thing that is very, very beneficial is when we see first a manipulation to the upside above the previous price action that we had before we opened up for us to take shorts. So when we drop lower to the lower time frames, let's say to the 1 minute time frame. So now we are on the 1 minute time frame, and let's draw this high right here from 7:35 as a reference point. So this is the high of the pre-market session. So the London session is from 2:30 until 7, and then at 7 a.m. the pre-market session of the New York AM session starts, and then at 9:30 we open up the New York AM session. So as we can see, the low of the pre-market session is right here. And the first thing we did when we opened up at 9:30 is we spooled immediately to the upside. So as soon as we get above the high of the pre-market session, that is a good reference point for us to look for shorts. Of course, this is not always the example. Sometimes we also go to the downside first and don't take out the pre-market session low and then spool to the upside. And sometimes we see something like this, that we spool to the upside, take out the pre-market session high, and then drop to the downside, and we have a market structure shift to the downside. So when we see that we traded above the pre-market session high, what you want to look at is if we get a market structure shift to the downside. So a market structure shift is either a displacement to the downside of a low, or it could be any kind of displacement of a PD array. So what are PD arrays? PD arrays are fair value gaps, order blocks, or something like that. Or also rejection blocks. There are a lot of PDRAs for all the ICT traders out there know what I mean. So for example, this one right here is a bullish order block. Then for example, this one right here is a bullish fair value gap. And what you want to look at is for the perfect timing of that market structure shift to happen. It is always first time and then price. You want to look at the timing and then you want to look at the price. So what you can see here is that we displaced this order block to the downside at 936. But this wasn't the final market structure shift to the downside because we haven't had the right timing yet. So as you can see here, the price level got confirmed that we have a market structure shift to the downside right here, but the aspect of the timing wasn't there yet. So what I mean by timing is that we have specific cycles in our trading, in our charts. And one of these cycles, for example, are session cycles. So what sessions do we have in a day? We have the Asia session, we have the London session, we have the pre-market session, we have the New York AM session, and we have the New York PM session. Then we also have smaller time cycles. So for example, one of them is 30-minute cycles. And you can see them when you click on the 30-minute time frame right here. So every 30-minute candle is a 30-minute time cycle inside of the market. And then you also have inside of the 30 minutes smaller time cycles. So basically every time cycle that fits into this 30-minute time frame, into this 30-minute cycle, are smaller cycles. So for example, what fits into the 30-minute cycle? 15 minutes, because two 15-minute cycles are 30 minutes. So let's have a look at the 15-minute chart. So as you can see right here, this is again the example of when we opened up at 9:30. We know that we are above a important high, which is the pre-market high. And then we have inside of our 30-minute cycle, first 9:30, and then we open up another cycle inside of this 30-minute cycle, and it is 9:45. So what you can do now is whenever we open up this new cycle, you can have a look what happens above this cycle inside of a 30-minute cycle. So first we have 9:30 until 9:44, and then we have basically the first half of the 30-minute cycle completed, and then we open up the second half of the 30-minute cycle. And whatever happens at this specific point, at this specific high of this first half of the 30-minute cycle, is where the most beautiful setups occur. So this is the little hint that I'm going to give you what my setup on Monday looked like. And my entry was approximately here, as you saw on my picture right here. And what my exit was basically this low right here. So this is how my trade looked like. I hope you found this short little trade recap insightful, and talk to you in the next video. Bye guys!